HIMS just reported earnings. The stock is down 10% in the after hours, as always, because if you've been following HIMS on a good day, it goes down 10%. On a bad day, it goes down 20%. It's been really bad. A lot of shareholders are capitulating, watching semiconductors go up, and this is the only stock that just can't go up. It just keeps on going down. And the report looks really, really bad on the surface. So it's time for me to do another video on the stock and talk about the report and my opinion on it in general, why the stock is going down, and my overall thoughts on the report. So I really hope you enjoy it as always. Now, subscribers did grow about 20%. That was a good improvement, but revenues barely went up 4%. 4% for a growth company, that's nothing. Normally, a growth stock grows 20% revenues, 30%, 40%, 50%, 4%. That's really, really bad. But it gets even worse. If you look at the United States revenues, it declined 8%. So most of the growth was driven internationally by the acquisition of Zava. I believe that's how you pronounce it, Zava. It has contributed about 70 million, and it grew their international revenue by 969%. So if it wasn't for the acquisition, HIMS would have declined about 8 to 9% in overall revenues instead of growing 4%. This is not a growth stock to me. It's not a growth stock to other people looking at it, and I think a lot of people are misunderstanding it. But it gets even worse. If you look at the adjusted EBITDA margin, it peaked out at 16%, then it went to 15, 13, 11, and now it's sitting at 7%. So no matter how you look at the report, it's really hard to find something positive. But I still believe investors are missing the overall picture. And this is mainly the fact that HIMS has stopped compounding those GLP-1s and stopped selling those pills and a lot of the high margin stuff that they were selling. They stopped doing it in February, March. So that has weighted on sales a lot. If they were still doing it, HIMS would not have declined. But HIMS stopped doing it for them to partner up with NVO, which has removed the regulatory risks on the stock, and it has removed the risk of them being sued. And this is a massive, massive improvement. But they partnered with NVO to sell those GLP-1 Wegovy pills, or whatever you want to call them. Now, in the first 6 weeks of launch, HIMS sold 125,000 orders. I don't believe most of them were reflected in the quarter, maybe a week of them or a week and a half of them, but most of that was not reflected in the quarter. Now, the way HIMS is doing it is they sell you those pills for $150 a month, but then they charge you a $150 health membership fee, which you get a lot of benefits within HIMS and Hers, and this is really high margin for HIMS and Hers. Now, many people made fun of the program and said, why would I do that? I could just buy it cheaper on Amazon, cheaper whatever. Well, 125,000 people signed up, so people are clearly interested, and this is really high margin for HIMS that hasn't really shown up in the quarter. The second one is international revenues has been doing really, really well. It grew from 55 billion in Q3, 64, 78. So the company is now not just growing in the United States, but they're also growing internationally, kind of like what Celsius is doing, but the growth is coming. Maybe it's not in the United States, maybe it's outside the United States, but the growth has been improving. But the big picture that investors are missing is that yes, Q1 was really, really bad, but the company actually raised guidance. Okay, Q2 is gonna grow 25 to 28%. Not declining for. They guided 25 to 28% growth in Q2. Why? Because it will factor in their partnership with NVO, which wasn't really factored in Q1. So this is a big misunderstanding. The second one is EBITDA margin. So we looked at EBITDA margin, and again, it looked like they were deteriorating. It was 7%. This is really, really bad for the stock. Well, their guidance is 7% for Q2, and overall fiscal year 2026 is going to end up at about 11%. Which is where it was on average. It was 11 to 13%. It's going to get back to 11% for the full year as the company starts to reap the benefits of the NVO partnership, because the $150 membership fee is really high margin for HIMS and Hers Health. And again, you have to also take into consideration that with international expansion and in Canada and in those places, they're going to have to spend more on marketing upfront, which will have cost them more to acquire the customer because they're not well known. But as they become more well known and people know them, like what they did in the United States, once they launch a product, so initial investment is always kind of deteriorates margins, but then the payoff, it starts paying off, and then more people know HIMS, and it becomes easier to acquire the customer. So Q1 was really, really bad, but the overall picture is looking much better to me. But the most important part of this all is that this guidance, which they did raise guidance, people were not expecting it. They raised guidance, and this increase in guidance does not include, it says the full year excludes any potential contribution from the recently announced proposed acquisition of I can't even pronounce it, Eucalyptus or something like that. Okay, now this is a big acquisition because this company has 775,000 customers. The annual revenue run rate is 450 million and is growing more than 100% year on year in annual run rate growth in each quarter of 2025. So this is a major, major acquisition, and it was not included in the guidance for 2026, and it's expected to close in the second half, but they didn't include it. So excluding this acquisition, just including Zava, which was a tiny acquisition, and the overall business in the United States, HIMS is expected to grow about 25 to 28% in the quarter and end the year with 19 to 28% growth. That looks much better to me. And we're getting all of that now with, again, the international markets. We have a big TAM. In Australia, we're getting 20 million people. In Canada, 30 million. In Japan, you have 100 million people. And in Japan and Canada, they're only in weight loss. They're not in sexual health, which has a massive TAM all over the world. They're not in dermatology. They're not in mental health, not in hormones, not in labs. That's not available yet in Japan with 100 million people, and in Canada with 30 million people. So now we have a US growing business, you have the international business, you have a call option on peptides, which I'm not a peptide expert at all, but I read a lot about it, and I looked at HIMS, and they have a facility of peptides, and I believe it's the only one, it's the only telehealth company that has a peptide facility, and they have the logistics, they have access to pretty close to 3 million people if you include the acquisition and so many more. So to me, that's a good proposition. And you're getting all of this at about 2.5 times sales for a company that does not have any more, you could say, friction with NVO. They're not fighting Big Pharma. They're actually partnering up with Big Pharma. So that was a major concern that's gone. Yet HIMS is still trading lower than what it was like in April at 2.4 times sales. To me, this is undervalued, especially with them reiterating guidance for 2030 of about 6.5 billion in revenues. And if you look at where HIMS is trading at right now, it's trading at about a 6.5 billion market cap. So it's trading at 1 time 2030 revenues, So I believe the stock is undervalued. I think it should trade at least 3 to 5 times sales, especially 3 to 5 times 2030 sales. So I think the stock is undervalued. I think 1 times sales is ridiculous. I think over time it should trade at 5 to 7 times sales, especially as the NVO partnership expands and they can offer more benefits to those people in the HIMS Health membership. As lab expands in general, those are really high margin stuff. And especially as they take them into Japan with 100 million people, and in Australia and so many places where they could just take the US playbook and somewhat replicate it outside the United States. So yes, the report wasn't the best. I'm not going to lie to you. them declining in the United States was not good at all, and it wasn't the best report I can imagine. But I don't think it was as bad as a lot of us were expecting. Like HIMS House was expecting them to miss. They didn't miss, and they raised guidance. So to me, it looks good. Not ideal, but it's looking better, and the picture is looking clearer. We don't have the NVO risks that we had before. We don't have the compounded stuff we had. Now they're doing the right thing, partnering with Big Pharma. So the next few quarters will be very, very exciting, especially in terms of international expansion. So I believe the stock is undervalued, and I believe the report was okay. And that was my opinion on HIMS. Hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.